Hey guys, Brian Stevens here, National Real Estate Post. I have Chris Martin. He's a co-CEO over at Oaktree. It's who you should be doing all your non-QM with. These guys price match everybody. Their technology has all been revamped. Their turn times are super fast, and they've been doing these products longer than anybody, and they focus on non-QM. These are all checking the boxes for when you're trying to place your loans. Don't miss Oaktree and the account reps that they have. Just click something in this ecosystem, but let's get right to the content of today. Chris, how are we doing?
Good, my man. How about yourself?
Hanging in there, doing really good. So I want to get to some marketing stuff, but first, where are we at with non-QM these days? Any products coming online? What's the health of the industry right now? Is it better than it was a few months ago?
Oh, it's a lot better than it was a few months ago. The securitization market has kind of found its ground. It's probably not where most securitizing issuers would like to see it, but it's at least stable. They can price their deals knowing that they're going to be within a 10 to 20 basis point range on the rate side. On top of that, there's been a lot more, especially with Oaktree. We've found a lot more fixed income players that want to buy and hold the paper long term. They don't need to see securitization as an exit. Insurance companies, family offices, these types of people. The yields are obviously higher, a little bit better than on the agency side. So buying agency bonds is still expensive, and where they can buy non-QM loans at a little bit more of a better price. And so that just the market in general has kind of, in my opinion, found more of a footing again versus last year. It was like how far, how fast, what's going to happen next with rates, with the recession. Fed Chair Powell yesterday talked about in his meeting that he thinks that we're going to avoid a recession, and we think that we're in for a soft landing, and all those things are all good. I mean, whether my opinion or your opinion may differ on that statement in and of itself, but him making that statement makes investors want to buy bonds based on people's ability to repay the debt. So all of those things are good. The quarter bump raise in rates coupled with his dovish commentary really sent the 10-year down, sent the 5-year down, which is mostly where the non-QM rates are being priced off of, between the 3 and the 5-year. So that was all good signs there. So the non-QM industry is healthy. There's some people trying to get into the space. They're trying to make a name, but as you mentioned, here at Oaktree Funding, we've been doing non-QM loans since they came out in 2014. We're ready to help you get your loans closed.
Yeah, it really was all that uncertainty that was going on. Things have kind of calmed down a little bit, and that's helped out the non-QM market then.
Oh yeah, absolutely. Yep.
So what about volume right now? So we know the volume's down across the board. We saw just overall numbers picked up in the last quarter, just a smidge, but it was the first time in 13 months. And we've kind of settled back down. What are we seeing in non-QM? Are they picking up market share? Are they sustaining? Where are you guys at?
Our business is growing.
Okay, good.
A lot of people, I don't know exactly what one thing that I can attribute that to. I got in this business in 2020, and when I was asked why I wanted to get into the mortgage business, it was because I knew that at some point everybody needs money, so why not sell money? And that's I think a lot of the reason why the markets have started to pick up a little bit. Coupled with people that are excluded, people that have money, they're self-employed, they want to buy different properties, they want to capitalize on opportunities with their DSCR investor programs, with our they want to buy a new primary residence, they want to our average loan size has gone from $500,000 back into that $600,000 range. So we're seeing a lot more in the jumbo space. We have, obviously, self-employed borrowers being a big lion's share of our volume. Our pipeline is growing. We've done, I think, 40% higher month over month the last 2 months from where we were at January, February the start of the year. And our pipeline's growing. We've got a lot of great customers, lots of great repeat business. We're, as one of the things that we're going to talk about, I know in today's call, is training, because of a lot of the training that we're doing for our brokers and in the community. I think we're helping people sell more, find more opportunities. And, with good repeat business, good service levels, they're going to bring those loans back to us, hopefully, if we're still, if we're doing a good job, and so on and so forth. So we're going to keep that up.
Okay, so let me ask you, just kind of transitioning over into our next topic here. I want to go out, and I'm listening right now. I'm a loan officer, even a real estate agent. I'm saying, okay, I get it. We've got great investor loans. We've got great self-employment loans. I don't have a database of self-employed people. I don't have a list of investors I can call on, Chris. That's wonderful if I have these people in my back pocket. What's my next? And listen, we don't get there overnight, but what's the next step?
Listen, somebody who's self-employed. I've been on the stage with you and you've talked about it. Ed,
yep.
You go get your hair done? Do you go get your car serviced? Yep. Do you go eat at a restaurant? Do you go? I mean, aside from eating at like a Chili's or something like that, I mean, even those places are many times franchised. So this economy works on the backbone of self-employed borrowers.
Yes, it does.
I know somebody who's self-employed. Property investors, that might be a little trickier. You can look at the county records. You can see who owns more than one property. Those of you that have MLS access, you can go and see who owns what properties and what area. Most loan officers have done one investor loan. I'm certain of it, probably multiple investor loans over the course of the past couple of years with all the refis that were done. Those folks are looking for opportunities as well. As we mentioned, find a property, work with your real estate agent to find a unique property that maybe they didn't know was on the market, or maybe isn't off. Maybe it's on LoopNet, or maybe it's on Crexi, or one of these other types of databases where you could find a multifamily product that you didn't know that you could do. And all of a sudden it's not on regular MLS. Then you bring a real estate agent in, and you bring a buyer in, and then you put them together and they go, make an offer on that property you get them qualified for. So, Oaktree is doing up to 8 units right now.
Wow. That's huge.
Yeah, we do up to 8 units. We'll do some mixed use, 2 to 8 units. We are getting ready. I'm not sure if I want to say this or not.
That's it. Now you got it.
June 1st is a target. So RTL team, just calling you out. We're launching our RTL division, which is the residential transition lending or bridge loans, short-term lending, fix and flip, ground-up construction for investment properties is being launched as of right now, June 1st. I know I share the wall with my operations manager, and he's going to see this meeting and be right in here and be like, hey, wait, you're not supposed to say anything. But we got the guidelines done. We're working on finalizing everything with our investors. So that's going to be another great product that we're going to be able to use to help drive in business, help you guys get multiple loans. You get an investor that's used to doing those types of products. You do one loan for them. And then guess what they're going to need after they're constructing, rehabbing that property? Well, they're probably going to need a DSCR loan. So you could also help them get them a DSCR loan, and we're going to help you, keep that within its own little, to steal your word, ecosystem. There are investors out there I know that have weird, funky names that you bring them your fix and flip loan, and then all of a sudden you don't get a call back from that client because they've called them and said, hey, do a DSCR loan with us. That is not how Oaktree does business. That's not how Oaktree ever does business. We do your loan on the wholesale side. That doesn't go over to anybody else to call ever. It's your loan. We're not touching your customer, and that would include our RTL division, because as we will be servicing and their asset manager on that loan for the duration of that period of time too. So that's
awesome. And I'll tell you what, it's the fix and flip right now is huge. You're finding people, and listen, nobody wants anybody in our community in distress. But times like now, where we have and underemployed folks, where we have record inflation, and some of these numbers that are dealing with superlatives aren't necessarily warm and fuzzy. And what it amounts to is there's more opportunities for fixes and flips than we had just a couple of years ago. And I will tell you this, and I do not make light of it, but when somebody gets kicked out of their house, they always do kung fu on the walls on the way out. Always. When somebody is getting kicked out of their house, deferred maintenance is gone. It's out the window. It's been out the window for a long time. Gutters are leading to dry rot, are leading to screwed up roofs, are leading to cracks in driveways, are leading to pipes that are an issue, or leading to kitchens and bathrooms that need to be remodeled. If you or know somebody who's into fixing and flipping, right now in particular is a great market for that. The other thing that Chris said, I want you guys to understand, June 1st, maybe June 2nd, but let's try June 1st. Hey, listen, get your act together right now. Get it together right now, because this is going to be huge. And then the other one is, and I just want to stress this, 8 units. Okay, I can't afford that. I don't know anyone who's going to want one of those. Oh, God, you were so off base on this one. 8 units. Here's the deal. If you find an 8-unit complex where your vacancy ratio is low, as it is everywhere in the country right now, 8 units pencils right off the bat. It just does. Think in your brain, 6 units, 4 units, 6 units, 8 units, pencils. It just does.
And here's the thing about those properties. It's not rocket science to do them.
No.
Okay. There's no competition. Aside from other non-QM investors, lenders that offer those loans, there's no competition, because the banks don't want it. Call a commercial bank, ask them to say, I want to get financing on a multi-unit property. Okay, our minimum loan amount's $5 million. Oh, okay. Thank you. Have a nice day. Oh, and by the way, at that $5 million rate, we want 30% down. Oh, you're not an experienced investor. We want 50% down. So unless you have that network and that's where you're going, an 8-unit property, if you're trying to start and build out your investment property, and listen, I can guarantee you, do you own any investment properties?
Yeah.
How fun is it to manage several single door houses? Right? It's tough. It's you got to have people, they got to travel, they got to,
right.
But if you can have 8 doors in one location, how great is that? And we're working on other products too to expand that, but as of right now, our limit's 8. that's where the market's at. I mean, if you can find those properties, and they don't always come to market, but I just got an email from Crexy the other day. There's several multifamily properties varying from 6 to, some of them are 12 units, but we're going up for auction. I mean, it's like, hey, just go and fix these up and rent them. I mean, it's not and by the way, the RTL program will extend out to multifamily units as well.
And here's the deal, guys. It's like what Krista said a moment ago. You're not really dealing with competition because these loans are few and far in between. And if you can do these on a DSCR, as a real estate agent, I want you to think about this. You spend your life, your energy, your resources, your marketing trying to find people who want to buy houses and list houses. That's what you do. Let's add a third pillar to what your marketing prowess is on a daily, weekly, monthly basis. Start looking at properties that match your profile as a real estate agent or match your profile as a lender. Okay, I got something in my back pocket where if I can find a 6 or 8 unit development complex where they're all rented out, I just need to figure out what those rates are, what the rents are on that, and then what the cost of acquisition is going to be. And if these numbers line up, and as I told you, they do, you've already found the property. Now you're searching for the client to fill the property. We've turned this whole thing completely around. And I'll tell you this too. If you're watching this on the National Real Estate Post right now, I want you to look at the video to your north or the south of you, or go just to the nationalrealestatepost.com. We posted a video today, Joanna did, talking about investor loans. Here's what we know. 50% of all investment properties in the country are owned by individuals who have 1 or 2 units. It's not your large institutional investors. A full half of them are mom and pops. They're your neighbors. Anybody who has equity in their house, do we know anybody with equity in their house? Is that money working for them? Could it work for them if they bought an investment property? And the answer is yes. As a realtor and a lender, you need to understand the opportunities that are in front of you. Perhaps your clients don't even know that opportunity is in front of them. It behooves you to let them know that they can make their money work for them if they so chose to. And investment properties is a great way to go about it. But to the point with Joanna's video, she says those institutional investors, all numbers indicate right now, they're moving their business and their money over to the sideline. They're doing it right now. They're looking at the market saying, we're not sure about this. What does that mean for you as a realtor and lender? It's time to pounce. It's time to pounce because you have less competition vying for the same properties. So this would be a great pivot of understanding the direction of the market right now and adjusting your business accordingly. And these guys at Oaktree are here to help you. And Chris, I know a lot of people aren't going to do this. I know we're running along. Just give us a couple more minutes here. I know a lot of people aren't going to do this. It's one thing to want something, it's to need something. Those are easy. But will you work it to make it actually happen? What is Oaktree doing right now to help realtors and lenders work the solution rather than just wanting and needing it?
The biggest thing people face, right, is they don't know something. Your lack of knowledge makes you fearful, right? So if you don't understand something, then you don't feel confident about it. So it's difficult for you to go out and market. It's difficult for you to go out and sell it. You have to believe in the products that you're selling. And for you to believe in the products that you're selling, you have to understand them. So our team spends as much time as they possibly can on the phones every day, doing Zooms, Teams meetings, whatever you guys like, teaching you, your team, your group, your office, multi-offices, everything that you could possibly need to know about how to structure these deals. And then when you get one, if you're still unsure, call us. We'll go through the scenario with you. You could price it online. You could see if it fits. But many times we can do things that aren't even on our online tools. We make exceptions all the time. There's certain things that we can do to make loans work that other people just won't do, and quite frankly can't do because they don't have the depth of the relationships with the investors that we have. So many times we can get things done that others just can't get done. And that's not to say that we're better than anybody else. That just means that we have just been doing this longer, and some of our investors trust us more than especially somebody that's new to the business. Also, we're not writing to our own securitization. So there's other lenders that have been issuers that started off by buying loans from guys like me, and they're now wholesale. Oh, we want to get into the wholesale space, which we could have a long conversation about my thoughts on that topic. But these guys are only buying for their own book. So if they're only buying for their own book, they're buying the loan for it to perform for the next 30 years. Oaktree, we want to make sure the customer has the ability to repay, and we want to make sure that it makes sense. But at the end of the day, we're looking for multi-investor outlets. Every investor has a different flavor that they want to have. So we're able to look at different investors and place loans with different folks. So we're going to train you on the products. We're going to train you on how to make things work. I know that you shared a few testimonials from some of our brokers.
Yeah.
That have had great experiences with us. I implore you to look at that. I implore you to go to Google. I don't know any non-QM lender that has a 4.5-star review on Google right now. And that's not for any other reason other than our account executives and account managers ask, hey, when you're done, if you had a good experience, would you please go review us on Google? And people do it because they had a great experience with us. So, we're here for you. We're here to help you. We want to make this the best loan process that we possibly can. It's not a Fannie Freddie deal. It's not a commoditized loan. It's a loan. There's a little bit of an art to it, but we can help get you trained. And listen, there's a lot of business to be had out there in this market right now. So we'd love to help you go out and capture as much of it as possible.
And honestly, guys, what are you waiting for? Like, it's there right now. Like right now, you can call these guys. You can have a one-on-one. You can have a group on one. You can have a team on one. You can have an office on one. You can have a corporate on one with these guys, and they'll walk you through all their products. They've been doing it longer than anybody. Don't shut doors in your business. Just don't do it. And it's not even just non-QM. It just don't shut doors. But non-QM isn't a product. It's not a product. It is a way of thinking. It is changing how you are approaching sales. You are expanding your horizons. Check it out, guys. Like I said, pre-qualified properties. Think about it. Find investors where they don't exist. These guys will help you do it, and they'll price match everybody, so you know you're going to be getting your clients the best deals out there.
What was it called the other day? Exclusionary lending, or inclusionary lending.
Yeah, inclusionary lending. But what Chris was just talking about a moment ago. What they're doing is they're finding a way to do loans where their competition, where other people who are dipping their toes in the non-QM space who don't do it full time, they're exclusionary. They're finding reasons to turn it down. You want to go with the companies who can make exceptions, man. Inclusionary loans. Chris, I love it, man. And I hope to get out there pretty soon. You still eat them cookies. You still eat them cookies.
Absolutely, every day.
You and me both. Hey, we'll talk about getting over our sugar addiction together another time.
That's right.
You have a great day.
Yep, you too. Thanks, buddy.
Thanks. Bye.